Today I'm going to show you guys the best ICT silver bullet strategy that is guaranteed to make you money every single time within the markets. So let's just jump straight in. So a lot of you guys might already be familiar with the ICT silver bullet. If not, that's absolutely fine. However, I have a big problem with the silver bullet, and I have a big problem with how this is taught across the board within the trading industry. The thing is, in the huge issue that people face is they do not incorporate liquidity-based concepts within the silver bullet. So the silver bullet essentially has got people trading every single entry, when in reality what you should be doing is internalizing liquidity-based concepts and using that as your edge within the market. And let me just break that down so it's as simple as possible. So right here, what you can see is we've got a significant high within the market. We then get a pullback, create this higher low, and then what price does is impulsively breaks through and makes a higher high within the market. And what this is essentially doing is running this external range liquidity that is resting above this significant high right here. And so what we need to do and what we need to incorporate is a liquidity-based concept like this one right here. Because as we know, in terms of liquidity, the way price moves is from external range liquidity to internal range liquidity. And all that simply means is when you see this push to the upside right here, we are running external range liquidity that was resting above this major high right here. And then once we see that, what we're looking for is a shift on the smaller time frames, a market structure shift, and then we can look to short that back to the downside, because once we've ran external range liquidity, the next expectation is that price will reach for internal range liquidity, which may be in the form of the most recent fair value gap, the most recent order block. That in itself is not too important, but the main concept is the fact that once we run this external range liquidity, we are looking for a silver bullet entry in order to get short within the market, and then we're going to look to target internal range liquidity. So that concept in itself will transform your trading career, and it'll ensure that you're not impulsively entering up at these range highs when price is actually due a correction within the market. So that is the liquidity-based concepts that we're going to be using. In terms of timings for the silver bullet, this, if you're from a Eastern perspective, so from the US, that's going to be 3 a.m. until 4 a.m. That is the London session. If you can't make that, then if you're from the US, you're going to be trading the New York AM session, which is 10 a.m. until 11 a.m. And you can translate accordingly if you are from another time zones. But these right here, this is from an Eastern perspective. So this is a US based perspective. So now let's look at some live trade examples so I can break down exactly what we're talking about right here. Okay, so this is on Euro USD. We're currently looking at the 15-minute time frame. So let's just break this down, okay? So we know we have external range liquidity that's resting up at this significant range high right here. So what we're looking for is a run of that external range liquidity. Then we can drop down to the 1-minute time frame and then look for a market structure shift and then look for an entry short within the market. In terms of time frames, I recommend, if you want to trade the hourly, then you can trade the 5-minute for market structure shifts. Or if you want to trade the 15-minute liquidity, then you're going to look for the 1-minute entries, which is what we're using right here. So what you can see on the 15-minute time frame is we're starting to run that external range liquidity. So let's just drop down to the 1-minute time frame so we can have a look at what's going on during our New York silver bullet session. So you can see right here, in terms of market structure on the 1-minute time frame, what we've got is a higher high right here. The most recent higher low was right here. So what we're simply looking for is a market structure shift to the downside, Then we can look for a pullback into a fair value gap, and then we can look to short that back down to internal range liquidity. So that would be taking price from external range liquidity to internal range liquidity. So let's see if we get our market structure shift. So you can see that's what we get right here. And you can see what price has created is a fair value gap right here. So if price pulls back into this area during our silver bullet session, then we can look to short with invalidation above the liquidity sweep, and then we can simply look to target a 1 to 2 risk to reward. So let's see if we are triggered in. Okay, so we're entering into the silver bullet session right here, and we are triggered in this trade. So we're triggered in right here, and you can see we get a sort of algorithmic drop, which gives you sort of an instant 1 to 2 risk to reward. So it's really up to yourself, okay? Because, you can look to take all of your position off at a 1 to 2. You can look to secure partials, allow a runner to run. However, when price does move this impulsively, it's very sensible to take pretty much all of your position off, because it's likely that you're going to see some sort of correction back to the upside, especially when you get these sort of algorithmic and sort of instant drops to the downside. So you can see that trade did hit take profit, and due to the extremity of this drop right here, you can see price did end up actually correcting as anticipated. So what you can see really what's happened here is we've took external range liquidity right here. This is taking external range liquidity, and then what we've done is traded back down into this order block down here, and there is also liquidity resting below these lows. So we've traded from external down into internal range liquidity. Okay, and this is a great sell example on Euro USD. Okay, so this is also on Euro USD. This is still on the 15-minute time frame, and what you can see is we have external range liquidity that's resting below this significant low within the market. So let's drop down to the 1-minute time frame so we can have a look at what's going on a shorter time frame perspective. So you can see what we get right here. We get a sweep of this significant external range liquidity right here. Then what we get is a market structure shift. So you can see we break market structure right here, confirming the bullish momentum within the market. We also create a fair value gap in the form right here. So you can look to enter off this fair value gap right here. Invalidation goes below the liquidity sweep, and then you're simply looking to target a 1 to 2 risk to reward. And please understand that you may get some further continuation to the upside. So we're triggered in right here, and this is during the silver bullet kill zone right here between 3 and 4 a.m. And you can see price then starts aggressively pushing to the upside, shy on a 1 to 3 risk to reward right there. So this is another great example of how we can trade from external range liquidity, which is taking this sell side liquidity right here. These orders were collected. We got our market structure shift confirmed right here, and then we look to trade that higher, running this internal range liquidity and this buy side liquidity that was resting above these major highs right here. It may be up to yourself if you want to go break even as we start pushing into these highs. That's really, down to yourself, okay? But this is really how you trade from external range liquidity up until internal range liquidity. Another great buy example there on Euro USD. If you do want to learn an extremely profitable strategy that has generated me and all of my members over 60% this financial year, then make sure to join the premium Discord community. The link is in the description down below this video. If you want some free analysis and you want to stay ahead of the curve with upcoming YouTube videos, then make sure to join the free Discord. The link is in the description also down below for that. If you're not in the free Discord or the premium Discord, I have no idea on earth what you are doing, and make sure you do join. Thanks for your time, guys. If you have any real and insightful questions, make sure to leave them down below and I will get back to all of you guys. As always, thanks for your time and I'll see you in the next one. Take care, guys. Bye-bye.